Warning. This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Right, hello and welcome to Camel Finance. I'm your boy Camel, and today I got a few things, right? First of all, I wanted to say thank you again to everyone that's been sending things through the PO box. I've got some very interesting postcards amongst some other slightly bigger things, so thank you again, just in case you missed it yesterday, and also thank you again to Eugene for sorting out the merch store. I really appreciate that too. So today, I've mostly got a standard episode for you, so a bit of Bitcoin news. We're going to go over the charts, take a look at how the trade ideas and setups are progressing, check for invalidation and early warning signs, of course, as always. And also, as you probably can tell by the title and the thumbnail, I've had an idea, okay? And ideas, ideas are bulletproof. So I'm going to share with you this idea that I've got, which involves selling my physical silver, or at least a good chunk of it, with the intention of buying back lower down, assuming this particular setup can present itself the way I expect it to. So I'm going to show you that setup. I'm going to share with you the idea. I'm going to explain why I think this is likely as an outcome, as a scenario. And then, of course, if it plays, I'll be looking, like I said, to dump a chunk of my physical silver with the intention to buy back lower and increase the stack without actually spending any money. So if all of that sounds like something you're interested in, sit back, relax, hit that like button, and let's get into it. First of all, okay, Jim Cramer, the counter indicator of all counter indicators, is posting lookout bears. Okay, so we might be in trouble. Okay, the bulls might be a little bit in trouble here, and we even had it on Mad Money, CNBC, I think it is. Jim Cramer says that the sell-off may be over, so not a good look for for long risk at the moment. Something else that is not a good look, particularly if you're an ETH kind of person, is the ETH ETF, the spot ETF, has been delayed to July the 5th. So a lot of people are speculating that this might be the catalyst to drive that cycle low higher for Bitcoin. I think that is not likely to be the case. I should also probably mention here, as I often do, the funny thing about the cycles is humans, the market in general, retail, the news, all like to append a narrative to explain the cycle low. But really, these cycle lows are in control, and everything else is at the mercy of the cycles. So the cycles are going to do cycle things, and then what we're going to do is find something to blame or attribute to that cycle low. If, of course, this was approved right on time for that cycle low and we were to get a rally, then the market would have said, well, that makes sense, okay? This is the catalyst driving the cycle low. But now, since this has been delayed, we can simply say, well, that's definitely not going to be the catalyst, right? But either way, the cycle low should do cycle low things. On a slightly more positive ETF news note, South Korea's new government is going to vote to allow a spot Bitcoin ETF in June. And we're seeing a massive change of tone because we've got new research authored by the former Greenpeace activist and environmental PhD economist confirming that Bitcoin mining is a powerful tool to clean up the environment and mitigate methane emissions. So what a shift in narrative from even just a couple of years ago when Bitcoin mining was allegedly boiling the oceans and using more electricity than entire continents. We're starting to see this level of ETF demand and general adoption growth have a real toll on the amount of Bitcoin sitting on exchanges. You can see the exchange reserve, which is this bluey purple line, trending down, okay, the entire time. Slowly but surely, we are apparently running out of Bitcoin to buy from exchanges. And this is likely a lot to do with the amount of demand coming into the ETFs, right? We've had a $438 billion asset manager disclose buying $1.3 billion worth of Bitcoin for their ETF portfolio. And it's not just the ETFs, right? We're also seeing Bitcoin held on corporate treasuries really start to support what MicroStrategy has been preaching since 2020. So ask yourself this: how does a profitable company with 29 million in Q1 2024 sales make a net income of 55 million? And the simple answer is it puts Bitcoin on its treasury. And of course, the more that we see this, the more this is going to catch the attention of other companies, and the more they are likely to start considering adding some Bitcoin to their treasury as well. And so never has there been such a buying spree by high net worth Bitcoin holders than what we have seen in the last 2 months, with Bitcoin ranging between 60 and 70k. These guys that I'm about to show you in a minute are holding between 100 and 1,000 Bitcoin, or roughly $6.5 to $65 million worth of Bitcoin. And you can see in orange here, the white is the price, of course. In orange, at the hard right edge, massive spike in people holding $6.5 to $65 million worth of Bitcoin. So larger size wallets, bigger players are stepping into this space and buying, whilst retail is telling you that was the top. That was the left translated cycle, and 40 or 30 or even 20k comes next. Over in the stock market, there is still plenty of fear out there, with the SPY trading just 1% from its all-time high. And allegedly, okay, unless this thing is broken, we still have plenty of fear. We still have a massive wall of worry to climb. So to that, I simply say, good, let them continue to be doubtful, let them continue to live in fear, especially given that we've got plenty of space ahead left in the daily and weekly cycles. Under the hood, I really like this, the triple 70 thrust. The triple 70 thrust indicator is triggered when the percentage of rising stocks in the market exceeds 70% for 3 consecutive days. So we've had one of these triple 70 thrusts occur, and what does it look like when we walk forward? I appreciate you might not be able to see this, but this is 5 days, 10 days, 21, 63, 126, and 252 days, and the forward returns after that triple 70 thrust show an average gain of 1.9, 2.8, 4.9, 8.0, 14.3, and 21.7% respectively. So whilst fear is high, whilst the wall of worry is massive, signals under the hood tell us to keep an open mind about seeing continuation to the upside. And all of this against the backdrop of the Fed officials saying that keeping interest rates where they are for longer than the public expects is much more likely than raising rates. And to that I simply say, tell that to the bond market. For anyone unfamiliar, the Fed funds rate is in orange, the 2-year yield is in green. Historically speaking, every time the 2-year yield rolls over, shortly thereafter we see the Fed move towards the onset of a cutting cycle in each and every instance. And what is really interesting to me about this, of course, is so far it looks like we are completing that breakdown, possible retest before resumption lower for the 2-year bond yield. If that is the case, and of course there's work to do, but if that is the case, particularly with confirmation in the form of taking out the prior low, in here, it will be absolutely silly, in my humble opinion, to be thinking that higher for longer is a real and normal and to be expected idea. When the 2-year yield breaks down, historically, it tells us that rate cuts are much closer than people are really ready for. So what a wild time to be alive. Higher for longer, yeah, tell that to the bond market. And so as promised, we're going to talk about this silver idea of mine. I'm not saying it's a good idea, but it does seem to be a fairly nice opportunity as far as I can tell. So here's the idea. The idea is if we really are about to see this blow off top, right? If we really are going to see gold move up towards 3K and that $60 silver target become a reality, then we should expect something akin to this to play out right here. I'm speculating that it will possibly look something like this, with a big squeeze all the way up to around $60 an ounce. And it occurred to me this morning that if indeed we get this, and then we enter that global recession, that deflationary bust, then it seems only reasonable that we will get a nice sharp snapback. And thus the idea is as follows. I will be looking to sell a good chunk of my physical silver somewhere at the blow off top, with the intention of buying it back all the way down here, perhaps as low as around $20. And immediately, I know what some of you are going to be thinking and saying, but Camel, if we really are going to have a recession, won't gold and silver do well? And to that I simply say, yes, it probably will. But first, there tends to be a big liquidation cascade. During crashes, correlations tend to 1, and silver and gold are not immune from this. I'm going to show you some worked examples. Okay, in the lead up to bloody October of 2018, silver dropped around 20%. During the C19 plunge, we saw silver get sold off as well as gold, and it dropped around 40%. Of course, in both instances, gold and silver are amongst the first and the fastest to recover, and that is what I'd be expecting out of this. This is much more of a drawn-out, extended, multi-year bear market decline. I would think what we get is a blow off top, a big crash back down here, and then we see that rocket into the true bull market for both gold and Bitcoin. I'd expect them both to behave the same. But to illustrate this further, if I go to the Great Financial Crisis, okay, you can see right here, silver drew down around 60% before it went into berserk mode. Again, whilst the stock market is crashing, okay, people are forced to liquidate assets. People are forced to sell things in order to raise cash to cover the margin calls and losses in other positions from the risk assets. So during the crashes, okay, gold and silver crash as well. Like I said, during crashes, all correlations tend to 1. And then what happens out of there is a rip-roaring bull market. We can see the exact same thing if I go back to 2000s with the top for the stock market coming in right around here. Again, we saw silver sell off around 20%. And of course, that was right around the time that we saw this big rip-roaring rally with silver again being amongst the first and the fastest to recover. So with all that said, here's the idea. Since gold and silver have a history of being sold off during panic, during stock market crashes, experiencing a violent and sharp correction that then is amongst the first and the fastest of the assets to recover before tearing off into a new bull market. And since the base case on this channel for some time has been that we are in the final innings of a blow off top before a global deflationary bust and a recession, of course this is to be determined. But what I'm saying is, if indeed we do get this, okay, if indeed we do start to see acceleration, if we start to see Bitcoin, gold, silver, the everything rally into that blow off top, before, of course, the parabola does what the parabola always does, which is violate spectacularly to the downside, culminating in a big crash. If indeed we get this latter portion to play out, then I am suggesting to you that gold and silver will not be immune from this, particularly if this setup occurs against a backdrop of gold and silver continuing to rally. Now, remember, historically speaking, this doesn't make any sense. Right? We don't often see gold rally with the stock market. The same is true of silver. We normally have gold thought of as a risk-off asset that trades up whilst the stock market is trending down. But of course, there are nuance to this. There are exceptions to this. And right now, I believe, as I've been saying over and over again, gold always knows something. Gold is breaking out here, looking to continue a big run higher. If I flip it onto log scale, so we've got a fractal, again, I'm wondering if this is what we're going to get play. One final squeeze from gold, that big deflationary bust, right, where gold is not immune. Gold, according to this fractal at least, would be expected to drop somewhere around 20% to backtest that prior all-time high break before then going full send into a rip-roaring rally. It is a big if, but if indeed we start to see silver squeeze to the upside, if we start to get this big parabolic uptrend, I will be looking to draw a trend line as I always do. I'll be looking to sell a violation of that trend line, dump in a bunch of my physical silver, and looking to buy it back somewhere down here in the $20 region. Based on this trade, I should be able to get somewhere in the neighborhood of 35 to 50% more silver without actually spending any money. If we can exit up here, buy back somewhere in this neighborhood, we should be able to increase the stack without spending any money. Hi guys, Camel from the future. I also forgot to say when I was recording this, another option for people that want higher exposure to gold, right, but have just been stacking silver for whatever reason, this would also potentially be an opportunity to exit the silver and then wait for this whole deflationary bust, this crash thing, and then buy the dip in gold. So it would be a way of converting your silver into gold for people that have accumulated a large silver position and perhaps want to exchange some of that for gold in order to increase exposure to gold. So that's another way of playing this, right? We get that big blow off top in silver, followed by a rollover. As I said, all correlations 10 to 1. We could see gold pull back as well. And it might be a nice place to take some exposure off of silver and increase some exposure to gold. So that's another way I'm thinking about playing this trade, or perhaps a portion of this trade. So this is the idea of mine. I will continue to update. Of course, we do actually need to see silver break through $30. But I believe the moment we get through $30, okay, 60 is going to come very, very quickly thereafter. You can see so far, we have broken out with a big red one that goes all the way back to $50, right? We've broken out with that. We have since made a perfect touch of that $30 level back here, and then again here. And now if we zoom all the way in, the thing to me is working on a breakout of this downsloping red resistance line. So if we can get breakout, retest, resumption back into 30 and then go, I think that $60 target comes very, very quickly thereafter. Like I said, I'll be looking to dump a big chunk of my physical silver up there with the expectation that in a deflationary bust, we will see what we always have seen historically, which is that all correlations 10 to 1. We get this big crash, possibly to backtest $30 or even $20, where I'll be looking to reaccumulate the silver I sold and some. So let me know what you think. Let me know what you think of this idea. I'll be really interested to hear it. In the meantime, as promised, let's check in on the charts and let's see what's changed. Let's see if there's any invalidation occurring. Let's see if the market is firing any early warning signs. As I was saying a few days ago, you know, this is most likely a daily cycle low. We've probably got a swing. And until we lose that upward sloping blue support line, then I expect the dollar to continue to run. Again, possibly a warning sign that the end is not too far, right? Why is the dollar running with gold? Why is the dollar running with risk, with Bitcoin? Okay, the writing is on the wall, in my humble opinion. One by one, these dominoes are falling. And for those of you that are sat there thinking, how on earth does the dollar go up? I have a video here from about 8 days ago called How the Dollar Runs with Bitcoin, Stocks and Gold. So you can go and check that one out. So far, gold, breakout, retest, possible resumption. It's got a bit of work to do, but I'm going to remain optimistic for now at least. Lose this downward sloping red resistance line, start to close back below here. And I think we will have seen enough for me to want to be getting out of trades and locking in the profit from all those other gold and silver positions we got. Oil is starting to irk me a little bit. I'm starting to think I called this perfectly and then didn't trade it, right? I was one of the only people saying short oil here, and so far I'm just still not sure. I'm still waiting to try and find an entry. So it'd be pretty painful if this is what comes next, right? And then I just completely missed it. But the cycles tell me we should be looking for a daily cycle low, a swing, and then that should give me my short opportunity, which will be right around the level at which we broke down. So a little bit more patience here. Should be looking for a counter trend bounce any day now, in my humble opinion. And then, like I said, we'll be looking for that rollover to short this thing. Here's Bitcoin doing Bitcoin things, right? This remains for me the best case scenario, okay? In which case we will have a cycle low out of this long somewhere in this neighborhood. But as I've been saying over and over again, these cycles are down, and currently this is looking more and more like a rounding top, more and more like it wants to drop into a cycle low in that expected timing window, which of course is just around 11 days from today for a perfect 60-day cycle low. Out of whatever swing we can get in this timing window, of course I'll be looking to long, and then what we expect to see thereafter are fireworks, of course. Anything other than this will be significantly reducing the probability of a left translated cycle. But so far, at least in terms of waiting for that cycle low to show up, so good. And of course, the members, all that patience is playing off for those crypto-related equities. We've got a whole heap of them, more than just these 4. We're nearly there, aren't we? A little bit more of a rollover. Let these crypto-related stocks pull back into that cycle low, and then out of there, we should be ready to conquer the last leg up in Bitcoin and the crypto stocks. And the S&P 500 looks pretty good. Still got a big wall of worry to climb, according to the Fear and Greed Index, but Jim Cramer is out here telling us that maybe we should be open to a pullback. As I was saying in yesterday's episode, we've left some gaps behind on all of the US averages, right? In here, there's a big one as well. So do we potentially have to come back and fill those gaps? As I was saying in yesterday's episode, it would kind of make perfect sense to see something like this cause a whole heap of fear, a whole heap of melt-up deniers to come out and say, ha, told you so, blow off top's a dumb idea, get the panic in here, really, really convince people that that is a lower high and we're about to come all the way back down to some silly low level, only for that gap to backfill us to bounce off of the support one last time and then come roaring out of here. I wonder if this would be the time to see that. Similar deal for the Dow, right? We've got a gap to backfill. We don't have to, but it wouldn't surprise me if we did something like this and went. And the reason I say that is because now is the perfect time to see a rejection at resistance for the NASDAQ. Similarly for the NASDAQ, there are gaps below. Okay, maybe they need filling, maybe they don't. But like I was saying, now seems to be a pretty good time to do it, right? We've moved all the way back into resistance. We can roll over, backfill these, cause a whole heap of the I told you so bears to come out, and then, of course, snap, and off we go. So now seems like a pretty good time to see some kind of pullback. But as ever, the invalidation levels are the invalidation levels. All the while we're above support, all the while we're above the cycle low on all 3 of these averages, then long and strong continue to push. Russell 2K starting to look even more encouraging, isn't it? Okay, not only are we holding support, but we're now, particularly if I move this yellow thing out the way so we can see, we are now pushing off of the big range break from back here. Okay, undeniably, this is a very, very good look for the Russell 2K, and as to be expected, breadth is continuing to widen, small cap participation is continuing to increase, and that is what we want to see for this big blow off top. So overall, not a great deal has changed. Couple of new ideas in the works. I do think we need to be open to seeing the stock market have that pullback, and thinking about it, since we're also expecting Bitcoin to pull back, I wonder if the two will go together, right? I wonder if we get that pullback to backfill the gaps, as I said, in the stock market at the same time as Bitcoin is finding that cycle low. That will drag the crypto-related equities down into that cycle low as well. And then out of that cycle low, in about 11 days' time, for Bitcoin, the stock market would have had one final perhaps pullback and shake out to trap those bears, like I said. And then it should be go time, right? So as ever, we'll continue to take it one day at a time. We'll continue to check in on this thing every day. We'll continue to be hyper aware of where this trade idea becomes invalidated, and we'll just continue to remain optimistic all the while we are not invalidated. So until next time, I hope you're doing well in life. Take care from me. All the best. Cheers. Bye.